Hey, what's going on, everybody? Frank Stocks here. Nothing I say is financial advice, entertainment purposes only. Wanted to do a quick video today before the market opens. Absolutely crazy what's going on right now. The SPY, everybody saw it Friday, had the worst day since June of 2020. You can see on the chart right here where the SPY has gone back to around 430. Gap to the upside right now, midterm, but I think what we're going to see, like what we saw last year when the SPY oscillated up and down and up and down into the new bottom, which was 312. I think now we're going to see that again. Personally, in my opinion, we're going to have oscillation down in this channel into a descending wedge that's going to go back and gap fill 393 or 394 here where this blue box is. Midterm, there's a small gap at 419, 420. So it's really crazy what's going on, but this is perfect with the TMF play that we've been talking about for a while. Again, everyone was talking about the SPY Friday. We played some Tesla puts, made a killing. One of my tweets here, TMF and TLT, time for a few months of consolidation. Government fiscal year change. The government's fiscal year changes in October. And recovery into election time. By 2025, this could be 500% back to $30 on TMF, which I think is coming. And we do have a gap back up to 556 that I think is going to start covering here in the next few weeks as we come into reversal. This was a bad market week right after a dividend. I'm not surprised it came down. I'm still very much in the play. So I'm guessing we gap fill back up 550, 556, and we start hitting these little gaps on the way up back to old highs. $10. This range here is going to be incredibly tough as we get into any type of treasury recovery, because what's happening is hedge funds have shorted over $500 billion in treasuries or treasury bonds on the market. It's absolutely crazy what's going on, which is why TMF is a three-levered ETF of the bonds. 30-year is at an all-time low, or 20-year, I'm sorry, 20-year. All-time low. It's never been this low. So I'm buying in at rock bottom. I believe this is bottom. It could go to 3. It could stay at 5. Nobody knows. We're in uncharted territory. But 3 to 5, when this thing runs back to 30, is not going to make a difference, folks. That's the thing. Long-term play, capture your quarterly dividends off this thing, which isn't much, but it's there. 12 months tax hold, long-term play dividends on the backside into a potential squeeze as shorts cover whatever they're going to cover into this, because the Fed has said they're not going to raise rates, but they're going to cut next year. Now, what I think is going to happen is the Fed is going to have to come out and do emergency rate cuts into December, because bank profits are going to go down. Shopping is going to be abysmal for Black Friday and the holidays. It's going to come out that the economy is on the verge, with the interest rates this high, of having a total failure, especially if the government doesn't go back to work. Then you're getting a lot of budgeting issues that are going to pop up along the way. So SPY had an absolutely horrible month. Now everyone talking stock market crash inbound. Where do people put their money when the stock market is crashing? They put it into treasuries. TMF, TLT is the ETF of those bond markets. TLT is the base bond. TMF is 3x levered off of that. 500 billion treasury short position currently from hedge funds. Betting SPY midterm downside with emergency rate cuts by December. Now, this is what I think is going to happen with the SPY, because everyone's talking about it. And this person here made a good point. This is a good tweet. Too much talk means it rips one more time. Tanks huge. I totally agree. And that's what I'm thinking is going to happen here. I think the SPY is going to follow this path, maybe not so defined. I just copied the charting outline here. But we do have a gap fill back up to 438. So maybe this thing just comes out, rips up, hits 438, goes sideways, hits this downward upper trend line, and then collapses again and starts that process all over again as we get closer to December, which is right here. We'll just put December 25th for Christmas. Boom. So we have X many months, the SPY trending to the downside. We're going to get bad earnings. We're going to get bad bank revenues because interest rates on homes are way too high. Home prices are still overvalued. Inflation's ticking up. Gas is too high. Food's too high. Everybody's running out of money Consumer credit card debt is through the roof. Auto loan 90-day delinquencies are through the roof. And if you guys want really good macro opinions, and this is, I can't help but agree. And look at right there, 20 hours ago. Credit card companies are racking up losses at the fastest pace in the last 30 years outside the global financial crisis. Boom. Bar chart. What do you know? This is gonna be a disaster by Christmas. Credit card debt is through the roof. People are running their credit up because they're out of pandemic money. The pandemic money caused massive inflation, gas up, food up, rents up, freaking housing inflated values, and people are buying them at 8.5% interest rates. And they're buying, it's the people who bought 3 to 4 months ago, they are now taking 10 to 15% downside on their homes as prices adjust with these sales. Now, suddenly, after 2 people bought houses down here in my neighborhood for over 30,000 more than I paid for mine, and they're the same, they're cookie cutter houses, same houses. Now there are 3 or 4 more houses up for sale that were rented because renters do not want to hold through this catastrophe. They're trying to dump their property, which is why the US government is allowing so many immigrants to come in illegally as fast as possible so that they can get them into new home loans at the higher interest rates, and they can lock them in to being sustainable labor for 30 to 40 years. Basically, I won't call it a new form of slavery because it's not. You make the decision to do it. But they are playing on the ignorance of a lot of immigrants that are coming over that are not fully educated on our financial system. They see a $250,000 house. We're getting ninja loans from multiple mortgage companies. Zillow's giving out houses with 1% down payment. And you're going to get locked in to a 7 to 9% interest rate for 30 years, and you're never going to be able to pay it off, which means we have a sustainable workforce for the foreseeable future because nobody in America right now wants to produce. Everybody is only making entertainment content or they're acting very leisurely, right? Entertainment and services are by far outweighing any production we're doing in the United States. That's really bad for GDP. Entertainment and services should not be calculated into GDP, is my opinion. So, long story short, I'm going to keep this video short. I think the SPY may pop a little bit short term in the next couple weeks to fill this gap, and then we're going to see more downside on it back down to the gap fill, I believe, which is 393 potentially before Christmas. So what am I going to do? Me personally, I'm already loaded into TMF big time. You guys know I'm following TMF and Hawaiian Electric. Hawaiian Electric has September 28th congressional hearing with the CEO. I believe she's going to come out, say we de-energized. Here's the proof. The stock comes back up, rallies to 21. And then I'm going to take some profit and see where TMF is to see if I can buy some more. But TMF long-term, 12-month hold as we get through these rate cuts that are inbound next year, possibly emergency rate cuts by December, in my opinion, which is going to make people flee to bonds. The stock market crashing, people are going to sell off. They're going to go into bonds. They're going to go into treasuries. The bond market's going to recover. Then the shorts are going to have to start letting go of that position as it happens, right? You do not want to be short bonds when the stock market is crashing and people are fleeing to safety before this thing takes a dump. And if it escalates and the housing market starts taking a hit and the bank profits that come out in the next couple quarters are not good because home loans are now 90-day delinquent from people who just bought at 8.5% interest, and their home loan, their mortgage payment is now $2,500 instead of $2,000 or $3,000 instead of $2,200, whatever it is. It's going to be a big problem, and it's going to escalate, and it's going to snowball through winter, and then you're going to have a problem with high gas prices for heating. We got the Ukraine war still going on. We've got multiple hurricanes flying around the world. We had the Lahaina fires. We got all this stuff going on, plus an immigration crisis, which actually there's now a couple rail lines stalled down south because of it that have been shut down. So that's going to make a small impact on the logistics system. So, like I said, in a nutshell, I'm TMF long term. I think it's going to squeeze out. And what I mean by squeeze is it's going to recover back to some of its old middle ground, maybe highs, right? But as the shorts start covering, if anybody gets pinched in this, you could see this thing do what it did here, right at the end of 2020. everything went crazy. The stock market started to go bonkers because of all the inflation money that came in, all the pandemic money that came in, and people started investing in the markets. And then right around March of 2020, this thing just popped to 55.26, collapsed down, came back up, recovered, and then started its downtrend. I think what we're going to see is we're going to see a nice slow recovery, up, up, up. And then by mid 2024, you're going to see this thing rocket again. It's going to squeeze. I don't know what it'll go to. I'm not giving you a price target. But even if we get back to 30 bucks, that's a good 500% for me on my money. I'm going to walk away, and then I'm going to look at reinvesting in long-term stocks in the market, which is going to be a really good thing personally. I think this is the dream, man. This is my personal dream of buying in at the bottom of the market. And the way to buy in at the bottom of the market is bonds, like the ETFs that are 3x levered. Bonds recover as the stocks decline. And then when you sell your bond investment in TMF or TLT, you take that money, you hold it, you put some away, you keep it safe, and you start slowly reinvesting as the stock market starts to flip back over. Now, me personally, everybody's calling for a crash. I think the worst that we see is probably 312 again. If that happens, that's fine. My puts on the SPY that I'm getting ready to buy, I'm going to wait and see what happens Monday. If this thing spikes up Monday, I think what I want to do is I want to buy some very small call options on the SPY for 430 for probably 2 weeks. I'm going to then buy long-term puts, probably out to, let's say, maybe the end of November for the SPY for probably 400. So I'm going to have my call. So if there's any short-term up movement on the SPY, I'm going to get that cash out. Then I can average down on my long-term SPY puts, which I'll hold until mid-November or the end of November, and see if this thing can crash down to the 430 range to gap fill, which people will consider a market crash. I'll cash out. I'll keep looking at my TMF position, which I think is going to go up as this thing comes down, as the market starts to crash. And if we hit 393 or 400 ranges and people start freaking out, maybe I'll look at taking another small SPY put for short term to see if we can get back down to these ranges at 342, which I'm not 100% sure will happen. But I did say a long time ago that I think the SPY needs to correct to the old pandemic high. And usually when I say something like that, let's just say I'm 20% off. So 312 for me, let's see, 312, did I say 312 or 340? Let's say 340 is the absolute bottom on this unless everything just falls apart. So anyways, any NVIDIA play? Not for me, man. Any ideas on HE this week starting tomorrow? Next week, HE, the CEO, is going to Congress on the 28th. I'll try to find the feed and stream it live. That's going to be a big deciding factor. If the CEO goes in there and goes, yes, honorable representative, here are the logs. We shut the power off. We already know the fire department left the scene for 40 minutes for lunch. The flames flared back up, burned the town of Lahaina down. The water was off. The fire hydrants were empty. It is a massive emergency management services failure that they didn't have redundant systems. And the fact that they sued Hawaiian Electric for not shutting the power off, even though all the emergency systems run on the power, but they say they shut it off. Somebody's lying, and I believe it is the government of Maui. I believe the Maui government, the local governments are lying. They immediately sued Hawaiian Electric because they knew they were in trouble. I'm going TMF after HE. Yeah, you still might be able to get in. Like, look, man, anything under 10 bucks on TMF is probably a good position in my opinion. I bought 10K worth of TLT in my 401k. That's a safe move because if it does go down, you're not going to get hurt as much as TMF. I'm all in HE. Hope it doesn't go much lower. Who knows, man? The problem is we're playing this in a market crash. But HE, if you get good news next week and HE runs to 21, I'm taking profit. I'm not going to be really greedy and hope this thing goes back to 31 in a bear market, right? If this popped back to 21, for me, that is 100% gain. That's good. I'll take that money and I'll look more at TMF. Maybe watch HE for call options after it hits 21. Maybe. But like I said, everybody's calling for a crash. Who knows? The sentiment's bad. The market does climb a wall of fear. So that's why I'm talking. Maybe I'm going to buy some SPY calls short term, and see if it gap fills this line here, which is 438. If we go from 430 to 438 within a 2-week period on some SPY calls, that is a big win. Then after that hits, I can buy or double down more on SPY puts. Now, if my calls don't work out and the SPY just collapses, then my long-term SPY puts will do good anyways, and I can just close the calls. So SPY calls to 438 short-term, SPY puts from 438 or the current position to November. And I'm going to be watching that. And then if we are right and the SPY crashes, not only do our puts print like crazy, but TMF should start recovering too. And in between, maybe we get lucky with HE and there's some good news on the 28th. So I just feel really, really on target, really consolidated, really focused, feeling really good on what's going on with where we're sitting now. And like we said, man, if you guys got into Tesla puts that we called out Friday morning, congratulations. Them fuckers went 89%, 90% or more. I closed mine too early. I closed mine at my target and I pulled 30%. But man, I missed out. I left a lot of money on the table on that one. But a couple people came and messaged me and said, man, these Tesla puts are printing like crazy and they made a big chunk of money, which is good. So now I'm going to take what I made. Of course, my new thing is anything I win on, any winnings, any gains, I'm immediately taking 50% out of the market and putting it in my bank account. That's my new strategy. I've pulled a ton of cash out of the markets this year on the other wins, but I'm going for smaller plays now because we're not getting the crazy volatility that we were having on these stocks 6 months ago. So I'm going to do smaller plays, more consistent wins. And then anything I win, I'm immediately taking 50% profit out of the win, putting it in my bank account, and just saving money up and getting ready for what? Housing crash. As soon as housing crashes, I'm going property hunting for long-term holds. I'll pay the taxes on it. And then 5 to 10 years later, when we have this situation all over again, because these situations keep happening faster and faster, then I'm going to make a bunch of money on that too. So I feel like we're keyed up and we're ready for the bottom of whatever's coming if it comes. But we got to think about this. The Fed came out and said they weren't going to cut rates till next year. That means we're holding high interest rates through December if they don't do an emergency cut, which is going to force people into really bad loans or defaulting on their loans because interest rates are so high. Bank profits are going to fall out with tightened lending. And as soon as bank profits fall off, we already know the banks like MCB, Western Alliance, Signature and all those ones that went out of business. MCB has horrible commercial real estate loans on its books, and they know it. So what did they do? Jamie Dimon came out, pimped the market, created a short ban rumor. The markets recovered on the banking side, and then they went into a lending frenzy. Banks were lending money like freaking crazy this past 6 months to put the profits on their books short term so they can shore up their stock before a crash happens. The problem is credit cards, revolving credits through the roof, 90-day delinquencies are through the roof, auto loan 90-day delinquencies are through the roof, and home loans are going to start getting there because of everybody taking out these massive 8.5% interest loans on 30 to 40% overinflated housing prices. So short-term SPY reprieve, maybe a short-term reprieve to 430 to gap fill just to get smacked back down again and get crushed. I'm not 100% sure which way it's going to go. So Monday, I'm going to buy a small SPY call for 2 weeks out, right? If it does fly up, I make some money. And then at the same time, I'm going to buy a heavier SPY put for longer term for November. But if my SPY call goes through the roof because this thing recovers just to gap fill and get knocked down again, then I'll average down here with the money I made into my longer term SPY call as TMF starts recovering. And again, I think when they see the market crash, which is what the Fed wants, the market to come down, the SPY to come down to 430, or I'm sorry, not 430, 393, 394. where this blue box is on this gap fill. If they get it to come down there, they'll have to do an emergency rate cut by December because Black Friday and Christmas shopping is going to be so abysmal that nobody is going to know what's going on. Like, people are not going to Christmas shop this year like they have in past years. They are out of money. I hear it everywhere I go. Go to your local bar. Go watch what people are buying. Go watch what people are buying at the grocery stores, and keep an eye out on traffic. Tell me if you think traffic is starting to lighten up in your area, especially on the weekends. I see at least 20% less cars on the road than normal. We haven't had a lot of traffic jams in Albuquerque. People are staying home. They're saving their money. They're eating beans and rice. It's getting pretty wild around here. So, anyways, and to note at the bottom of this, the NYSE owner is looking at securitizing mortgages now, tokenization of mortgages, which they're doing a big buyout from Black Knight, I think. It's a big deal. Mark Cohodes retweeted it. You know us, we're all big on the T0. Mark's big on T0. And if Mark was at the NYSE this last weekend, I'm thinking he's trying to set it up where the NYSE and ICE and T0 work together for the tokenization of mortgages into this housing market crash, which is going to be huge for T0. So I'm watching that too. Either way, long story short, here's my play next week. This is what I'm doing. I'm not telling you to do it. I'm going to do light SPY calls to 438 for 2 weeks out. I'm going to do long-term SPY puts down. I'm probably going to buy the puts. I'm going to say for 419. And then if my calls print and it does run to 438, I'll use those gains. I'll sell it and I'll average down more on the 420s. I'm sorry, 420, not 419, 420, just because. And then I'll hold that. And then I'm going to continue to hold my HE. And if my SPY puts print before HE returns and we go down to 420 and it looks like we're going further, I may just sell them at 420, call it good, buy more TMF, load up, hold for the long haul. Within 3 to 4 months, I'm betting emergency rate cuts, which is going to cause people to flee out of stocks into bonds and treasuries, which is going to cause TMF and TLT to go up. And if anything happens, a $500 billion short position against U.S. bond, against the treasury markets is going to be huge when this thing flips on its heels. And the funny thing is Bill Ackman's out there saying, oh no, stay short treasuries, blah, 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 blah. It's easy to say that when you're standing next to the fire exit, especially when you're short. He's short. I believe the long-term rates, 30-year rates, will rise from here. As such, we remain short bonds through the ownership of swaptions. The world is a structurally different place than it was. The peace dividends, no more the long-term deflationary effects. And what he wrote is, I mean, he could be right. I could be completely wrong. But what he's talking about here is staying short bonds longer because he thinks rates are going to continue to increase. And the Fed already said we're not raising rates anymore. We're going to do cuts next year. But what I think is going to happen, and what he is doing, is he's saying, let's stay short. He put out his big short thesis. Everybody short bonds, $500 billion position. It's going to be a first one out the door covering race. It's better to be standing by the exit and then yell fire and get out and then look like a genius, especially if you decide to flip your position and go long after you yell fire and you make a killing on the market on the upside. So, housing is horrible. Banks are probably doing really bad right now, in my opinion. You can put a lot of profit on the book if you lend to anyone and everyone short term, but midterm you're going to get screwed. Housing's still inflated. Everything's expensive. Gas prices are going to continue to go up with the policies of the current administration, with independent energy. So if the Fed does not come out after banks take a little hit and shopping is bad and everything's getting into the holidays and do an emergency rate cut for the holidays, it's going to be really bad through winter. Really bad. But the beautiful thing is if TMF doesn't take off before December, you can sit there and hold it and continue to gain the dividend on it for long term. Eventually, rates will come down the market will come down. And I think if we see the SPY come down to these levels here, this position here, this channel, 419 to 394, 395, this is a big thing. We'll just say 419 to 400. This is a big channel right here with a gap fill here and then a gap fill here. And if it comes down in those ranges, that could be a huge signal for a market crash, which could happen if the Fed does not cut rates. If the Fed cuts rates before December, it will prevent a market crash, and I believe the SPY will bounce from 394 and start a recovery into more rate cuts, which will cause TMF to go up and possibly into a squeeze that people have been talking about as people flee the US stock market and go into bonds to protect themselves from a potential crash that could happen if we hit 393 on that gap fill. It could be really bad. So anyways, just wanted to cut a quick video. Hope everybody enjoyed it. I'm not telling you to buy any of this. Let me take the comments real quick. Let's see. Sup, RWK, Red Bill. We got that one. I'm all in HE. AMD, been in my money maker anytime it hits below 100. Like now, I got 14, 110 strikes for October. Nice, man. Also taking some profit HE at 21, but not before that. Yeah, absolutely, man. 21 for sure. I did SPY puts for market crash the last 3 years. Was going to skip this year. Happy Sunday, Spence. Thanks, John. Appreciate it, man. Red Bill, the high gas prices are deflationary. Red Bill, watch them say they want to ban short selling treasuries because it hurts the country. That would be an epic squeeze. Oh my God, dude. If they came out, Jamie Dimon came out and said, we're going to ban shorts on banks. SEC is going to ban shorts on banks. If someone comes out and says, hey, we are cutting off any new entries on shorting the U.S. bond market, the treasury bond market, because it's not good for the country, TMF will squeeze like nobody's business. That is, I'm going to copy and paste that one, buddy. Red Bill, do you got a Twitter handle? It's probably the same. People who use the same handle for YouTube and Twitter are heroes. Let me see. Nope, I don't know. David what? Red Bill, David. What's your Twitter at, man? Okay, lower bag 0. Oh, David, yeah, okay, I got you. I know you. I can't remember all your guys' Twitters to your YouTube, so. That would be hilarious. Have they ever banned short selling on bonds? U.S. Treasury short selling ban. Hmm. That would be some funny stuff. I don't know if it's ever happened. With a 500 billion short position on treasuries. That would be awesome. Either way, guys, that's all I wanted to hit on you. That was a good comment, Red Bill. I really like that. I really hope that's the case. And if they do decide to do that and you're right, we're going to come back here and celebrate that comment for sure. But either way, you guys are awesome. Thanks for coming in on Sunday. See you tomorrow morning at Market Open. I'll be streaming live. Please make sure you like the video. I'm going to kick it out, share it on Twitter. I really like this exchange also today. It's really funny. I'm going to do some clickbait here on Twitter. Here. U.S. Treasury bond short band. That's funny. Clickbait. You guys have a good weekend, though. I'm going to click off, go enjoy the rest of my weekend. Have fun. Stay safe. Froggy Stonks out.